Hello, traders. Welcome. It is Tuesday, September 24, 2024. Great day in the markets today. So markets up yet again today, although fractionally, but we'll take it. We'll take what, 16 points on ES here, 14 points on the SPX, maybe a quarter of a percent higher on the day, but all together, great stuff today. We're going to get into it. We're going to talk about what we're doing in our account. I'm going to cover a trade that we made today in the main Income Navigator trading account, which is my main trading account. We're going to talk about that today. We closed a trade for a winner as well overnight. So while we slept last night, we were making money, which is the great thing about trading futures, which is one of my favorite things. And that's really what the Income Navigator main portfolio is all based on. It is a futures trading account. I love selling premium and selling options on futures. So selling premium, that's my favorite strategy. Love that theta trade. But also I love selling options on futures. It gives you great leverage, which again, with great power comes great responsibility. So if you're going to have great leverage, you're also going to have great risk, and you've got to make sure you mitigate that risk with the appropriate hedges and diversification of your underlying. So you don't want to get too overweighted. Make sure you have plenty of BP left. Make sure you're hedged. Make sure you have a trade plan. Make sure you're sized correctly. You do those things. Okay. And I think futures is really one of the greatest trading vehicles on planet Earth. So we're going to talk more about that portfolio today. We covered some stuff in the Lazy Trader portfolio yesterday. We added trades today, but that's not really going to be my focus here. I will give you the fact that I did sell a leap on JP Morgan. And why would I do such a thing? Well, if we're looking at the markets right now, I'm a tad cautious. The Fed just cut 50 basis points. I talked about this yesterday a bit as well, and I've been talking about it, where if you're looking at the predictions for the rest of the year, it looks like the Fed's going to cut another 75 points. Well, they only got 2 more meetings. So how are we going to cut 75 points in 2 meetings? You're going to have a 50 basis point cut in the next 1 or 2 meetings. Do you think the Fed's going to go 50 basis points back to back and then maybe a 25? Either way, we're going to be down 100 basis points easy by the end of this year. That alone should give you a little bit of caution on the market. What's the Fed really concerned about here? Inflation doesn't seem to have gone away. It's not flaring up significantly. Okay, but why is the Fed cutting so aggressively here? What is it that they are seeing that we're not, that's causing them to want to cut this fast? Okay, they were slow cutting on the way down, and now they want to get these, they want to unwind these rates so quickly. Makes me a little concerned. Well, anyway, so we've got this rate cut, and we're probably going to see more. We've got an election coming up in about 45 days or so. That's going to impact the market one way or the other. It doesn't matter really who wins or who loses at this point. There's going to be volatility leading up to that. And then there's going to be potentially volatility on the move and for a couple of days afterwards. Then hopefully things calm down. Whoever gets in, hopefully the markets start to digest that, and we start to at least see more certainty in the market. Markets love certainty. Doesn't really matter who is in power in the White House necessarily for the markets. Obviously, there's some candidates better that are much more pro-business than others, and more pro-market and more pro-investing and trading. However, all of that aside, the markets don't like uncertainty. So once we have at least a new president elected, the markets will then calm down a bit, and they'll go back to focusing on earnings and some of the other things that are happening. However, I think we're seeing this market continue to rise. I think you're going to see volatility continue to pick up a bit. It's still pretty low. We're looking at a VIX of 1539. So volatility isn't doing jack squat right now. So there's really not much volatility, at least in the general stock market itself. But I think once, hopefully we get through the elections, we get a little bit of a relief rally. I think this Federal Reserve rate cut cycle could lead to a nice, strong market performance in the short term. And I'm thinking maybe in the next 30 days or so. And then maybe after the election, maybe we get a little bit of a rally into that. However, I'm still very, very cautious. And I'm going to show you a little bit of why I'm cautious out there today. So I think expect a little bit of volatility heading into the election. I think we get a little bit of a bump right now that we take advantage of. And then I think we hunker down. And I'm going to show you what I'm doing to take care of that. And I also think, well, let's take a look at the charts. All right, so let's get into the charts here. Let me share those with you, and we'll see, you guys maybe see what I'm seeing as we move forward a bit here. But I think overall, you really want to be in bonds, particularly, and that's I know not everybody's in agreement with me, but I'm going to talk about that. But here's the ES. So here's the S&P 500. On the S&P 500 itself, had a nice update today. We are right back to this recent all-time high. You can see, though, down here, and we pointed this out, that on the weekly chart, you've got a really strong divergence in the RSI. We are making new highs, but RSI is not anywhere near new. In fact, it's not even near the most recent high. Well, it's close, but not there. And it's definitely way off of the previous highs that we've made. So we don't see the strength necessarily in the market, even though we're moving higher here on the weekly chart, but everything does still seem very bullish. If we're looking at the daily chart, let's take this little line off, even we can see the divergence here in the RSI. We're also getting into overbought territory. Now, we're not at the 3 ATR band, but we're close. If we also put in let's go in here, let's take a look. Let's turn our Bollinger Bands back on. Okay, so let's turn the Bollinger Bands back on, and you can see what's happening here when you've got these Bollinger Bands starting to open up to the upside, but we're not far. The Bollinger Band and the 3 ATR are nearly at the same spot. Volatility is expanding. So we can see that, that's positive for this run. At the 13 above the 21, above the 50 EMA is positive. Bullish PSR. So Tom, what are you worried about? Well, I'm worried about the fact that this has been just a runaway rally to the upside with really no break in sight. I never loved that to begin with, but we'll ride it, and we're set up to take advantage of it here. MACD did not set a new high today. RSI is almost to overbought stages. Now we have a squeeze firing. We are 4 bars into a squeeze. Typically, these will last about 8 bars. So maybe another 4 days, 5 days or so before we start to see the squeeze momentum coming out. We'll keep an eye on the markets, but we're nearing, not only this resistance, but these upper Bollinger Bands and upper 3 ATR bands. So overall, I'm cautious, but bullish. I mean, the markets are still heading up, and I'm still very bullish on it. All right, let's take a look at oil. Oil, interesting play today on oil. I know there's a lot of noise and spaghetti on this chart, and I apologize if it makes it hard for you to see. It's much easier for me on a big screen here. Oil, relatively flat on the session, but we've had 3 decent weeks of recovery on oil. We're back to a pivot level and a support level that's now flipped to resistance that we're really struggling to get over. However, the daily chart looks really good on oil, and the weekly chart looks like maybe it's trying to recover, but you're still in a downtrend on the weekly. Bearish PSR, 21 below the 50, below the 200. Everything on the weekly is saying, hey, we're still bearish until you show us otherwise, and we're in this downtrending channel. The daily is saying, hey, we're a bit bullish here. We're recovering off the bottom. We get the bullish PSR, rising MACD, rising RSI. I like this yin and yang. So the big trade that we stuck on today was we stuck a strangle on oil. So I like that right here. I like the fact that weak on the weekly, gaining some strength on the daily, that little yin and yang going on here. So our trade of the day with the members in our daily trading session today was all about oil and getting an oil strangle on. Well, it wasn't all about oil, but that's one of the major ones. Let's take a look at bonds, because this is the other major discussion topic. I've been bullish on bonds for months and months and months and months. Since April, I have been a bond bull. I want to be long bonds. I want to be long bonds in a variety of different ways. I'm trading 112s on ZB. I'm trading naked puts on ZB. I'm trading credit spreads on ZB. I'm selling puts in TLT. I'm buying leaps in TLT. I'm buying TMF. I'm selling covered calls on TMF. Everything I'm doing is driving the bond higher. I'm not driving the bond, but everything I'm based on is the bond driving itself higher, and we're making great gains on bonds. So what are we seeing right now in the bonds? Because we've had a pretty nice pullback since the Fed announcement, which I think has been a great opportunity. This is giving you an opportunity, in my opinion, to get in if you haven't. So we had this previous resistance level here. You can see on the daily with the yellow line that we finally broke out, ran up, pulled back, and now we're just trying to hang on to that line. You still have stacked EMAs on the daily and still stacked EMAs on the weekly, still a bullish PSAR on the weekly. However, you are starting to roll over and lose momentum on the weekly, which is, to me, it's okay. I don't mind that. A pullback would be needed. I would love to pull it back at least to maybe this 50-day, somewhere around the 120 mark. If we stick around there too and just move sideways, that's okay with me. Right? So I like where we are on this. I love these candles. A pretty interesting candle today, not necessarily a hammer or dragonfly doji, but you've got this big reversal where you came down to the 50 and this trend line, and you bounced well off of it and finished higher on the day on bonds. So unchanged, essentially, but not bad on bonds, finishing well off of those lows. Is this an area where we could potentially see a reversal on bonds? I hope so. We got long some more bonds by selling leaps. We have a TLT leap campaign in the Lazy Trader account. So we've been campaigning leap puts there. We've got TLT in this account as well. We've got a free leap call trade on that has a covered call on it. So we're looking at that. We've also got 112 trade running on bonds right now. That thing's doing just fine. We've got naked puts on bonds. We've got another naked put on bonds that was part of an old 112 where we actually closed the put debit spread for a winner, and now we're left with the naked put that's still up 30%. And in order to take a little bit more advantage of that, I really turned it into a strangle by selling some covered, or it's not covered. I sold an out of the money call on that. That out of the money call is now 5 days old and is up 30% almost. So love where we are on the bond futures. If I had more BP, I'd be putting more money to work on bonds at this point in time until they prove that they're no longer a good opportunity. I think at least for the next 4 or 5 months, bonds are going to provide us with a really good opportunity. I like the longer end of the curve. The short end, we're cutting rates. Okay? And on the long end, they're still holding those rates a little bit better. So they're investable. And I think people are going to pile into that, especially if the market moves sideways, tips over. But right now, where's that money going? That money is going into this one, baby. It is gold. Gold is moving higher. It is now above the 3 ATR and the Bollinger Band. It's getting extraordinarily extended. On the weekly chart here on gold, we are well into overbought territory on gold. And then last time that happened, we tailed off and then moved sideways, but we dropped about 100 points on gold. Let's see if we get back into a little bit more of a calmer action on gold. But we are overbought daily and weekly on gold, but it is just cranking to the upside. Beautiful on metals. I would say all metals on the future side trading really, really well right now. So we've been making money on gold. If we take a look at copper as well, I'm going to drag this one up underneath so it just makes a little more sense. We're going to take a look at copper. We're also going to take a look at silver today as well. But let's take a look at copper first. Copper, gigantic day today. So copper, huge up day, up almost 0.8%. In relative terms, that is a big up day on copper. taking a look here. I've been talking about it. We broke out of this descending wedge, which we can pretty much put this thing to bed now. No sense really even paying any attention to this. It's all about the uptrend that we got going on in copper. And we'll draw some of these lines on here. We'll see how this thing fares. You could even potentially, look at a bit of a channel here that we've been up and down and up and down. And now we're breaking outside the top of this channel. Is it getting overextended? It is on the daily. It's not yet on the weekly. I think there's more upside to copper. We just had a copper put credit spread come off, I believe in 8 days was the trade on that, closed this morning. So yeah, 8 days, 50% winner in 8 days, generated $715 on that in 8 days. Great trade on copper. If we look at silver right now, pretty big up day on silver as well. There's a couple different resistance levels that we had here. We're breaking through both of them today on the daily. The weekly chart looks great, potentially here. And we could even be looking at a bit of an upside down head and shoulders. You've got the head here, the left shoulder there, the right shoulder here. We've got the neckline right about here. We could just be breaking ahead of the neckline on silver. So I like that on silver. I think that's really setting up pretty nicely. We don't have that same setup on gold or copper, but on silver, it is a bit of an inverse head and shoulders pattern. It's a little clearer on the daily chart here. You can see here's the left shoulder, the head, the right shoulder, and then the neckline, which we started to break above today. If this neckline holds, where we ran essentially from about 27 to 32, we could be looking at about 37 on silver. I like silver here. I think it's a good trade opportunity. Not quite as overbought as the other ones yet, but it's getting there. I think you could still get in on silver, make a little bit of money on silver. I wouldn't go crazy on it. And I think maybe a butterfly or broken wing butterfly trade might be perfect. We covered those pretty in depth today with people in the daily trade session today. But I did talk about broken wing butterfly trades, how there's no, we have no risk to the upside on those. I love putting those on in a 2-to-1 ratio on the broken wings. Those look good. Aussie dollar. Now this thing won't stop. Okay, so this one, we don't want it moving so much, and it's also breaking out. Is it a head and shoulders as well with a neckline here? Maybe. It's not as well defined, but yeah, there's the left shoulder in here from it. Here's the head potentially, and then here's the right shoulder. So maybe a bit of a reverse head and shoulders on this one as well. We're definitely breaking through this resistance level, moving up here to the top of this channel. And great moves here. Not exactly what we want for a strangle here. Our strangles are down a little bit. That was pretty much the drag on the account today, was the strength in the Aussie dollar. RTY, I'm going to skip around today. I want to cover everything with you. But RTY, if you believe in these Fed cuts sticking, and we're seeing at least another 75 basis point cuts before the end of the year, potentially. We're seeing the Fed cutting into early next year, beginning of next year. Those are going to be great for small cap stocks. Small caps are going to benefit, although so will tech stocks, so will consumer cyclicals, or consumer discretionary, I should say. So I like consumer discretionary here. Who are your leading consumer discretionaries? Amazon and Tesla. Energy stocks should potentially do well. Some of the financials should do well, and that's why we got into JP Morgan today. And then I also think small caps, and the best way to play that is either IWM in the lazy trader in a PM account, and then here in the main income navigator account that I run. This is all about futures. So where can we get in on RTY? Well, right now we're sitting on a put credit spread that's up 46% in 7 days now. So 7 days on this thing. A couple day pullback, fine. Pretty much just a flat to slightly down day today. It is losing a little bit of its momentum, but it had gotten quite a ways away. Just some big, gigantic weekly moves in here. Big moves down, big moves up, big moves down, big moves up. Crazy stuff going on in here, super volatile. But the IV rank on RTY, the futures, is only 18. So it's kind of pretty low IVR. We'll keep playing this to the upside as long as we can. I do like this trade. I think we continue to trade in the small caps and keep those moving higher. Change this to a little bit different so we can see what's going on. But this trend line here, okay, we're still in this nice uptrend. We've got some resistance here that we're running into. I want to see some break of this resistance. I love the pullback. Everything's stacked and ready to go. This thing seems to be moving decently. Let's see if we can continue on RTY. If not, at least bouncing around and staying elevated, I think is strong for that. So overall, good stuff. I like where we are on that. Let's take a look at the accounts really quickly, and then we'll let you guys go for the evening. But where do we finish on the trade tracker today for the main account that I trade? Delta dropped to 150. So my Delta is down. Okay, why is Delta down? Well, we'll cover that briefly here. So Delta is down overall, 0.04, very Delta neutral, 929 on Theta. We did add that oil strangle today, so that's going to pump up our Theta as well. We're staying at about 0.26. We're staying right about that 359,000. We're staying really at the 2-month highs that we've been at. So we're doing well there. BP usage moved up again today. So we did add that oil strangle. Bill still sticking out where it is. We're at 55%. When you take Bill away, it's a little elevated from where I want to be, especially since I'm a little bit cautious right now. So we're going to relax. We're going to let some things come off. We've got that RTY trade coming off potentially. We just hit the 6 o'clock hour. So we've got futures back open again. So let's walk in. We'll take a look at where things are in the after hours market right now. And then we closed today another $700 in gains. That gain was on the copper put credit spread. My trading strategies have really not changed. I know August 5th, Volmageddon, everybody threw in the towel on the 112 trade because weren't hedged enough. Okay, didn't understand what they were doing. I didn't have enough hedges on myself. Okay, and people think, oh, you know what, we can do. It's too crazy. It's too volatile. It's something that happens once every blue moon. Doesn't mean we should ignore it. Okay, it was a one-off event. We took a little bit of losses, but we're back. I'm not scrapping the entire plan and going to something new. I'm watching people scrapping plans all over the place. I'm done trading. I just want to go back and invest for a long term. I'm done trading the 112. I'm just going to trade, defined risk trades. I'm done trading futures. I'm only going to go trade SPY or stocks. If you think stocks are less volatile than futures, you have never traded stocks. There's nothing more volatile, in my opinion, than trading stocks, especially the way most people on YouTube are trading them. You're looking at the Palantirs, you're looking at the Hood, you're looking at Coin and Mara, and you're looking at all these crazy trades that people are putting on in these low-quality names. Okay, these things can bounce all over the place. Even your high-quality names, your NVIDIAs and your Apples, your Microsofts, your Googles, all over the place. Okay, it doesn't take much to drop a stock 5, 10, 15, 20%. Okay, futures, okay, we've got the volatility thing we got to watch. So I'm sticking with the bear trap trades, the 11X trades. I have scaled back to the 111 temporarily until I secure the vol hedge that I like. I think I'm getting there. I think I like it. So we've got that vol hedge on that we're working on. We're also hedged with delta hedges, and I love the way we've got these working right now. We'll be back into 112s, so don't fear. We're not throwing in the towel on those, but the 111 or 112 or 113 or 223s, however you want to trade them, the bear trap trade is one of the best trading vehicles, bar none. Don't give up on it. Okay, it is still one of the greatest trading vehicles. It has generated for me multiple doubles of my account over the years. I'm certainly not going to scrap it because we took some losses on it. Okay, we found a hole, we fixed the hole, we're back in action. Sticking with the 112s or bear trap trades. I'm sticking with the strangle trades. Got the new strangle and oil back on, so we're going to keep cranking on strangles. We've got 112s on other futures that we're still working on those. And then we've also got some credit spreads that I've added to it. Why? Because credit spreads are giving me a low buying power way to just keep cranking cash while we build back up and we get everything squared away to get the full function of the 112 Death Star back running. So that's what we're shooting for. We're going to put the Death Star back together. We're going to rebuild it. We're using the 111s just to lower volatility a bit. We got our hedges in place. We got some vol hedges that are in place. And one of the things we're doing right now is we have calendarized and diagonalized a bit, but we have calendarized the 112 trade to turn that into some super hedge opportunities as well. So not only are we making really nice tail profit on the 112s, okay, we're also setting ourselves up for some really nice put debit spread hedges that are going to be sitting in our account for months. We looked to do one in Q today. I did not get filled on it. My buying power is a little bit elevated, so I want to wait till something comes off. I'll get that trade back on. I want to be out of a lot of these naked puts pretty close to election time, reducing my volatility. And I'm going to be sitting on a pile of wide put debit spreads that are essentially been paid for by the naked puts that are already gone. So now I'm well hedged. So if you're wondering why or how on a bullish set of trades that I can be so delta neutral, it's really because I am sitting right now on a boatload of put debit spreads. I'm sitting on a boatload of 111 trades. I have the naked puts on. Okay? I didn't take them all off on August 5th. Those are coming due. Some of those have already been taken off for profit. So, and we've added more since then, and we've added more 112s. We've added some of these calendarized 112s. Okay, the 112 is still the best trade ever. We're going to be putting this out there for you. We'll show you guys what we're doing in this account, but love the way we've got this thing set up. And I just give you a quick peek on the Lazy Trader account today as well. We bumped up to yet another new all-time high. So this account continues to hit new all-time highs. 246,311 new all-time high in this account. And we're sitting there on pretty much a 50% buying power in a portfolio margin account. So we have a lot of room to really go. And we've got, I believe SVOL today is going ex-dividend or tomorrow. So we added some more SVOL to this account as well. SVOL, we've got it in both accounts. So I like where we are. We're generating income through Bill and SVOL. We're also generating some income with TLT and covered calls in both accounts. And in the main account here, we're sitting on just a lot of different opportunity trades on futures. Quick peek, there we are. You can see we're sitting here on the Aussie dollar trades. Again, that's down today due to the fact that it moved higher. However, oil, we're in great shape. We're up almost $8,000 right now on the oil trades we have on ES. We're doing great. Yeah, we're down overall, but most of those are all these put debit spreads. We got one there. We've already taken the naked puts off for winners. Got one there. Okay. Yes, there's two hedges. Those are, of course, always down. Another one. That's number 2. Number 3. Okay. Ignore that hedge. Here's one that's getting close to coming off. Here's number 4. Okay. This one is a 200 wide. Okay. This one's getting close to coming off. Okay. Here's the naked puts of one of our diagonal or calendarized FB trades that we have on. And then down here, we're sitting on number 4 down here. This one's another 200 wide. We've got an XL trade here that's 100 wide that's getting been profitable, getting close to coming off at some point here too. We're sitting at this one at 83%. And then here's the other part of the calendarized trade. Okay, and we've got a naked put on, which is doing fantastic. And here's the other calendarized, I call it diagonal, it's really a calendarized FB trade. Okay, this thing is a 500 wide being paid for by the naked puts. Gold, we've already closed the naked puts for a winner. We're just sitting on a put debit spread. RTY, there's our put credit spread up 45%. And then ZB, we're sitting on nice gains in bonds, bill, SVOL, TLT. That's where we are. Right. So all told, bringing the Death Star back, the 112, the bear trap trades, they are still, in my opinion, one of the best trade strategies out there. We'll keep evolving. I think we've got the right hedges. We've got great delta hedges. I think we've got a good Vega hedge, volatility hedge on that too. We're able to put these things on in some different configurations. We're working on the different adjustments or showing you how to adjust these trades to generate additional income and create additional hedges from them. Got it dialed in. We're rocking and rolling. Good stuff. Ready for whatever the market brings our way. I hope this was helpful to you. If you like it, please click the link below and like this video. We'd appreciate it. Get the word out to people. If you're not a subscriber, jump in and subscribe. If not, we'll see you guys later. Take care. Enjoy a great rest of your eating. Bye-bye.